So, I mean, it's a holiday shortened week, generally a lot less volume. Two reports coming out. They're delayed and a little bit backward looking. One hits inflation for producers. The other one, retail sales. Either one of those market movers, either one of those that you really need to pay attention to this week?
We think the retail sales numbers can be particularly important on the backs of what we heard last week out of Home Depot, Lowe's, Walmart, really to get a better sense of what's going on with the U.S. consumer, particularly in light of the Fed meeting, which is only 2 weeks out. And so we think they're going to be very interested in hearing that, albeit, as you noted earlier, there's so little liquidity this week that it may be hard for the market to really get behind anything.
So we mentioned in the beginning of the show, last week moved higher. We saw the markets moving higher on the idea that we might get a rate cut from Fed Governor Williams. Over the weekend, we heard from Susan Collins up in Boston. She says, there's no real urgency. Do you think that's going to weigh on the U.S. markets today? Obviously, the futures are higher, but do you see that weighing on the markets throughout the day?
I think it will. I mean, you look at what happened on Friday and in the trading day when Williams comes out, talks about how there's still this opportunity around cuts. You throw a little cold water on it over the weekend. I think the market's going to be going back and forth, not just today, but through the rest of this week and into next week in preparation for the FOMC meeting. And the reality is the market is really craving some type of cut. It doesn't have to be much, but they just want to get some sense that the Fed is behind this.
All right, so when you say the market's craving some kind of cut, does it have to happen in December, or is the idea that as long as we're still in that rate-cutting path, the market feels some confidence in the Fed being kind of a friend as opposed to a foe?
We don't think it has to happen in December. It could happen in January. And to your point, as long as the Fed is not a foe, to your great expression, we think that the market can still feel pretty good. I think what is really going to be important is what happens after the announcement that Wednesday in the press conference around what are they telegraphing? How do they see the economy moving forward? And really this tale of two discussions around unemployment and inflation.
All right. Sentiment seems to be kind of all over the place, Alan. Let me know if you disagree. But Friday, again, it was on the idea we might get a rate cut, but there's still concerns about the AI build-out, some of the debt being issued by the hyperscalers and other companies in that build-out. Inflation's another concern. The president actually on True Social this morning talking about tariffs are going to bring in more and more money. Well, of course, a lot of that money actually just comes from all of us. It doesn't seem like anything's necessarily changed, but we continue to see banks come out with some very bullish forecasts for 2026. Bank of America was the latest. They came out yesterday. Their growth forecast for the U.S. in 2026, 2.4%. They go on to say they believe uncertainty levels are going to remain elevated, but they expect the president to make more market-friendly policies ahead of the midterms and focus on deregulation and de-escalation of trade tensions. Is this what we should be paying attention to, the idea that 2026 potentially could have more clarity and maybe an administration that is more focused on what a lot of people would call market and economic-friendly policies?
We think so. I mean, when you look out to 2026, one of the biggest benefits is the fact that we start to see some of the tax benefits from what came through with the big, beautiful bill. We think that the overall economy is still very stable. And we heard this with some of the retailers last week around the underlying U.S. consumer. And I think that's what's driving some of the improved sentiment, if you will, across the markets around 2026. And it doesn't mean that it's going to be easy. We need to see a broadening. It can't just be the hyperscalers. We can't see just spending on AI and data centers. We have to see that flow through into industrials and healthcare and even consumer staples. And inflation has to be kept in check.